Target stock is down 50% in the past 5 years and down 68% from its all-time high. Let's see if this is a good opportunity to buy the company by looking at the fundamentals and running a DCF model to estimate the intrinsic value of the company and potential future returns. Target reported earnings yesterday. Net sales were 1.5% lower than 2024, and comparable store sales declined 2.7%, which is very bad. Target is not a growth company. The revenue grew from $73 billion in 2015 to $109 billion in 2023. However, since then revenue has been decreasing and is now at $105 billion. Regarding guidance, they said that the fourth quarter of 2025, the company is maintaining its expectation of a low single-digit decline in sales. Analysts are expecting Target to recover and grow to $118 billion in 2030. I agree with analysts because I believe that in the long run, Target is a company that should grow with inflation. Regarding profit, net income has been around $3 billion over the past decade, with the exception of 2022, which clearly was a fluke year because of online orders due to COVID, and they've had more or less the same free cash flow. Analysts are expecting profit to grow. This year, EPS is expected to decline to $7.48 per share, but then it is expected to grow to $10.30 per share in 2030. If you assign a 15p to the company then, it would make it a $155 stock, meaning around 80% returns from current levels. So even though profit remains the same, the earnings per share is going to grow. Why? Because of the number of shares outstanding. They have been buying back a ton of shares over the past years. This is very positive for investors because you own more of the company and you share the profits with less people, basically by doing nothing. So if profit stays the same, but they buy back shares, the amount of money you get per share in reality is more. Then, in order to calculate the intrinsic value of the company and potential future returns, I use my spreadsheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $70 per share, middle $115, and high $173. And because the stock is now trading at around $84 per share, this means that if my low assumptions occur, you would get a 6.3% annual return on your money, middle 16.4%, and high 25%, which by the way, these returns include the dividend, currently at around 5% yield. Why? Because dividends come from free cash flow or profit, so you cannot double count them. Moreover, as far as my assumptions, I assume Target grows revenue between 1 and 5% over the next 7 years, the average of profit margin and free cash flow margin between 2.5 and 4.5, and I assign the PM price to free cash flow at the end of the 7 years of 13, 14, and 15. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, Target is now trading at a P of 10, its cheapest in a decade. Regarding the balance sheet, Target has $3.8 billion in cash and $20.4 billion in debt. This might appear like a lot of debt for a company that has a market cap of $38 billion. However, keep in mind that they are a retailer and they have a lot of leases, so I think it's manageable. Lastly, we have to talk about the dividend. It currently has a yield of 5.3%, and it is a safe dividend as the payout ratio is 54%. This is what percentage of their net income is used to pay the dividend. Anything under or around 50% I consider to be safe. When we look at an investment, we have to look at the risk-reward, and in this case, I believe there is very little risk in investing in Target stock, as it's a well-established company that I believe is going to be around for a long time. This is not a company where you are going to get massive returns, but I believe you can beat the market. Plus, if we enter into a recession, this might be a great stock to hold. Remember that this is not financial advice, and you should always do your own research. Lastly, if you want a discount on stockanalysis.com, grab my code in the description. I hope you found this video valuable. Let me know what you think about Target stock in the comments, and I'll see you in the next one.